Everyone, let me know the sound is okay. Just give me a thumbs up, and we'll be starting in just a few minutes. Welcome, everyone, to the Kendall Report live stream. Lot to talk about today. I may get kicked off YouTube after today. We'll see. I wouldn't say it's controversial, but I am going to address some things that maybe aren't so popular. And we're seeing a lot of shifts in the country, and I'm going to just chat for a minute, setting this thing up. So let me zoom in here. See if I can zoom in. There we go. The things that I want to talk about today are going to be some of the tax changes that are being proposed and things that are going on in the planet on taxes. I'm actually hoping to attend a tax event that's happening overseas, and I think it's there's a lot of people looking at what's going on here and the craziness. And for the most part. I've been telling you folks that they're going to keep adding numbers onto this thing. Now there is a 10-year budget being proposed. Realize that Biden's not going to be president for 10 years. He'd be lucky to live that long. But they're talking about 12 trillion now. And it's even interesting with what they've done so far. Maybe I should bring up the, I'm gonna go over there and just bring this up maybe, and we can talk about it a little bit. But the debt clock, right? That, it is right now at $28.3 trillion. And just based on what they're doing right now, if we go out, I believe, to 2023, 24, we're looking at this number being 40 trillion. And I just want to preface this by saying that I'm not negative on the markets, but I'm going to try to unpack this as clearly as I can. Just a lot of things on my mind lately from the standpoint of what's going on, and it's almost bizarre to watch. I mean that. I know a lot of people hated the Orange Man, but the Orange Man wasn't doing weird stuff to the economy and the world. There's an agenda that's being played out there that is radical at best, okay? And it's radical from the standpoint of what expectation is. I'm going to do my best to piss on the electric thing, because the electric car thing is a joke, okay? Just everything being electric is a joke. Everything being green is a joke. Right now, 3.2% of the electric cars on the road are electric. And to go from no more fossil fuels to all electric is not going to happen. The fossil fuels will be here forever. And I know I'm an old dude and everybody's going, oh, you don't get what's going on. I do get what's going on. It's going to take, I wish I had some numbers that I thought I captured. Let me look and see at my phone, because it was pretty interesting. But I want to talk about this because this goes to the energy story that I want to get to. So this is the setup for the energy today, because this energy trade's not over. As a matter of fact, it's just beginning. I'm going to show you some stuff today. Hopefully you'll be able to really connect with, and yeah, so it's going to be interesting, to say the least. Let me just look at something. I'm hoping that I captured something that I did not. Okay, so, but it was an interesting stat that I was hoping to have, and I'm pretty sure. Let me try one thing. Bear with me, folks. It's worth it if we get there. No, not going to happen. It was a great stat, but let me just kind of paraphrase basically saying that the amount of metric tons of fossil fuels are being used. It will take decades to do this, and the cost of doing this will be off the map. So we're talking 40 trillion just based on paying interest and the building of the debt that we're seeing right now. Let me go half and half on the screen so you can just see this thing. And I'm sure you folks have been here and seen this, but this is the reality, and this is going to be 40 trillion. And what they're doing right now with the energy, and I'm going to unpack this so we lead into the theme of what I want to talk about today, is the energy is going to be, they're trying to shut down the U.S. production of fossil fuels. This is the agenda. They're shutting down ANWR. They're shutting down all the leases they can. They're reversing anything that Trump had a signature on. And I'm not saying everything he did was good. I'm not saying anything about that. What I'm saying is that they're shutting down the oil production. We were energy, independent, and they're moving us away from that. So trying to force this Green New Deal on everyone, and it's going to cost a lot of money, and it's going to be nearly impossible to produce all the solar panels they would need. It's going to be impossible to make the batteries, and it just goes on and on. So it's actually a 100% fantasy, and this is why you're seeing the whole Biden administration starting to melt down. They don't even have all the Democrats on board anymore. People are starting to realize how ridiculous everything is that they're proposing, and just throwing trillions of dollars. Like I said, they threw out a 10-year budget. I think it's 12 trillion now. That's what they want to spend, and it's all toward us. You could spend probably 30 trillion and not get to the finish line on this thing. So this number here, not doing a thing more, maybe spending the $1 trillion so-called infrastructure. I'll do air quotes so you can see that. By just spending that, they're going to, this number here on this sheet will be 40 trillion in 2 years. Maybe faster, depending on what's going on. And in fact, there's money that was pledged last year during the COVID situation that hasn't even been used yet. They haven't even spent what they've already proposed, and they just keep stacking and stacking and stacking. So this is, it's Build Back Better. Listen, I'm an old guy. I've been in the United States. I will tell you, and those of you in Asia and other places, not so much Europe, but in Asia, you know what modern looks like. And we definitely need modernization. I'm not arguing against any of this stuff. I'm just saying the amount of money that they're trying to spend, and trying to make it pay. And I'm going to go from this agenda over to the taxation issue, because this is something that I thought was total BS a while ago. I would have argued to the death that this would never happen, and now they're at least trying to get it to happen. So let's just migrate over there to that for a second, and then we'll go back to that. We'll get ultimately into the dialogue of what I want to talk about today. But the taxation issue, the G7 was a posturing meeting. Everybody in the G7 already has more than 15% taxation. The only entity that doesn't want to join, 12.5, is Ireland, right? They're not really that excited about that. Apple has been in Ireland for 40 years or something ridiculous. So there's always going to be these tax havens, and what they're trying to do is stack everything up. And it's sort of the best analogy I could come up with. What I believe they're trying to build is they're trying to make the smaller countries that don't have that much tax base, it's a redistribution tax for basically the large tech guys, the folks in power right now. They love their help, but they don't like what they're doing. They want their money, right? And it's all going to backfire, I think, in the end. But what's happening is this is a distribution tax that they're trying to put together right now. So every corporation has to pay some number, but the reality is it's actually stacked on the top end. It's just like a ETF. It's the capitalization stack, where everybody that's going to pay these taxes will be on the top heap of that. And you're going to have spattering across different nations, but 60-70% of all the companies will be U.S. companies paying this tax. Excuse me. And the result of all that is that tax will be into a large pool, international pool. And this is what I would have argued to the end, that we won't have an international tax. Well, that's what we're trying to do. This is, I believe, the globalist final battle to try to get us all into into the globe and try to get everybody paying. So here's the deal. It's sort of like the colleges, right? The top 20 colleges bring all of the money into the TV revenues. So what they do is they have this really crap schedules on college football, so that the small colleges play the big colleges so they can get part of the TV money. It's the same deal here. They're going to take these deals, and the smaller countries are going to want to play in this thing so that they can get a piece of the action. I think that's what the game is. And I've talked about Janet Yellen being the wicked witch of actually she was the fairy godmother, waving her wand, distributing cash. Now she's going to the evil witch of the West, and that what she's doing now is really putting out this big agenda. Now she and her husband are both ex-professors, University of Berkeley. I lived in the Bay Area for a long time. Everybody knows the basic agenda that is there. This is what they've been teaching everybody. That is probably any of you folks that are 25 to 45 years old, you've heard this stuff in college. This is the redistribution effort. And this is the moment in history that we're going to get to look back. I wish I could hang around for 50 years and see the result of all this stuff that's going on. But this is definitely what's going on. They're trying to squeeze down the energy, which won't work because you can't. I want to see they're building a truck stop next to my office here, and I'd like to see them not have electric excavators and all the different equipment out there. It's all going to be powered. There's a lot of things that will always be powered by fossil fuels, trains, and it goes on and on and on. And so the point is that they're squeezing it down. They're going to put taxes on everything, and all that's going to be what's happening. Okay, so let's talk about what is likely to happen from my viewpoint as far as the distribution of these assets go. So if you're in the right spot, which I am working on agenda, I'm going to show you some of this today. If you're in the right spot, you're going to benefit. Even with the higher oil prices, you're going to benefit. They're going to jack oil up. I don't know how far, but I believe it'll go to the targets that I mentioned in last night's video, 91 to 104. That's probably the men. There might be something even bigger than that. But all of this squeezing down of the energy sources, even if OPEC opens the spigot full on with the economies all coming back on, demand coming back on, everything that's happening, it won't be enough, especially if you squeeze the U.S. down, because remember, last year the U.S. was the largest oil producer on the planet. So they're squeezing that down. They need to squeeze where they can to get oil prices up, so it forces everybody to go the direction that they want, even though it's a 20, 30-year process. And they know this to get it there, but they have to put so much pain and inflict pain in the economy that somehow that's happening. So the good news is we're investors, so we get to play wherever we want. Some of the meme stocks, you see what's going on with clean energy and some of that stuff. We'll talk about that. Matter of fact, I'm going to solicit you guys to help me focus on that when we get into more of an interactive session here, once I get done with my little rant today. But this agenda is absolutely huge. They're going to play it out, and there's going to be winners and losers. And probably the guys that are working in the oil business here, there's going to be a squeeze down, but they're only going to be able to squeeze it to a point, and they'll do it where they can. But there will be some winners on this thing as well, and there's going to be a lot of fossil fuel companies make a ton of money, and they're already working a lot. So I've been talking about on this channel for probably since December. I said energy, financial are going to be really big areas. Also, going back to last July and September, I started to focus you in on the small caps and mid cap rotation that was happening. And that's starting to reemerge, and I think it's because of these other two trends that are out there. So I'm going to go through all the details here in a few minutes, and I think what I might do is bring up our platform. I'm going to stay on this theme that I'm on right now before I go through the indices and hit all the markets, because I think there is something really here on the energy side that is going to make things very dynamic. And I think the energy, financials, because we're going to see some upward pressure in rates, even though a lot of inflation expectations aren't showing up right now in interest rates. I don't think that's I don't think necessarily the fact that that's not happening, that it doesn't mean it's that inflation isn't happening. It just at the moment not being reflected where we normally expect it to be reflected. And that's one of the other issues that we've seen a lot is everybody thinks well, it's not there, so it's not happening. That's not true. There's a catch up. And I would be somebody, I saw a comment early on that somebody said, why would anybody want to buy treasuries? I have no idea, actually. And I would agree with that statement totally. So let's do this. Give me just a second here. I'm gonna bring up some things on the other screen. So let me just see what you guys are talking about. If you go to the unfunded, somebody just said check on the unfunded liabilities. It's absolutely insanity there, because now you're at 149 trillion already there. So things are out of control. This is something we've known for a while. I don't spend a lot of time talking about this particular situation because I think they're going to continue to use MMT, which is modern monetary theory, to continue to expand this, because there's no way to pay for this. There's no taxation, there's no way to pay for it through what you would call traditional sources. Typically, infrastructure deals get funded through toll roads and bonds in the economy, all those kind of things. That's not what's going to happen here. They're going to create the money and go from there. And I just think it's really interesting if you take a minute and look at Janet Yellen's background and look at her husband's background, you'll find out some really interesting things and the agenda. She was the perfect Treasury Secretary for Joe Biden and for the Green New Deal. She couldn't have been picked better. When she was at the Fed, she had constraints on what she can do. Well, now it's Katie bar the door. She can go anywhere she wants, and that will be the plan. So let me bring up something here for just a second. I'm going to put you on a screen just so I can get some things set up, okay? Thanks for your patience, everyone. I just had a couple things set up. I had a lot of distractions this morning. I had things I wanted to get set up for this presentation today. So what I'm going to show you here in a minute is we're going to start to dig into just what's going on with energy. And I saw a comment. Somebody said, I love San Francisco, but I'm not a communist. I was just looking at some of the comments as they were coming through. I worked in downtown San Francisco for years. I was a trader on the Pacific Options Exchange. And I love San Francisco, and it's a very sad thing. One of my partners, actually, I've actually been in Nancy Pelosi's house, and it's not when Nancy Pelosi owned it. One of my old partners and actually owned that house and sold it to Nancy, I think for $35 million. And I've met Nancy Pelosi's husband. He used to be an investor in our fund, and Gordon Getty and other folks that were investors in our fund. And it's just kind of interesting. Things weren't like that. This was back in the early 90s, so things were different then. But yeah, so I miss San Francisco a lot. I worked in the city for years, and it was an amazing place. And haven't been there for years and don't have any intention of going anytime soon. So, yeah, I'm just looking at some of your comments real quick before I dig in this next section. Somebody made a comment, the EV thing is way more toxic. I saw a show or a special on the other day that they were talking about just all of the land and things are being destroyed trying to get solar and wind and all this stuff. They're destroying lands everywhere. And, they're doing it in the name of the Green New Deal. And this is one of those things where society has just went off the rails, and we'll see what the effects are. Maybe none of us are old enough to see the true effects, but this will be looked back, this moment in time will be looked back in history as a significant event. I don't know if it'll be good or bad. We'll find out. Maybe all this stuff works out at the end. I'm really not saying it won't. I'm just saying there's a lot of challenges to try to get there. And whether you can get people committed to the point of doing that's it. So that's the thing. Yeah, I believe KK 237. God save us. But it's actually, I'm not going to go into that, but I just tell you, it's our responsibility to stop these people. So. You just got to speak up. Don't be afraid to speak up. Yeah. So anyway, what I want to do next is I want to start to talk and get more in depth with this energy situation. And I think I've got here, I wanted to look at something. I think I'm logged into the right account here. And let me just look for something really quick here. Yeah, I thought I was on the right account. I know, Jay, you're listening. If you could you post the name of the I thought it was just Clean Energy. I don't see them right now. There was some really good portfolios that we built that were Clean Energy. Yeah, I agree, Brian, totally. But listen, this is the thing. As far as the Green Deal and as far as what the agenda is, it's still our job as investors. Try to figure out what actually might happen, what might not happen, where to place bets. I gotta play into. I love these Reddit guys that are moving these stocks around, and because that's really what it's all about. And this is kind of a segue just for a second. That if you haven't read, you should read the book Reminiscences of a Stock Operator. And if you read that book, you'll see that that basically what's happening right now. There used to be a lot of consortiums of traders. Used to be J.P. Morgan, Joe Kennedy. There was a whole group of guys that manipulated the market back in the 20s into the 1929 high, and everybody was mad at Joe Kennedy because he bailed out early, and he didn't get caught with the rest of them, and he stopped playing. I think it was about 4 or 5 months before the crash of 1929. He took his money and run, and everybody was giving him a lot of crap. But if you read that book, you'll see what's going on with Reddit right now. They've tried to stop all this stuff. That's why if I've seen stories recently, the SEC's watching activity around these stocks. They're trying to figure out right now how to stop this stuff. I guarantee you that they're trying to figure out how to get people talking about this and ganging up on stocks and doing all this stuff. I actually absolutely love it. Yeah, I think it's a best thing to happen to Wall Street in a long time. Yeah, so not only Mary, she's talking about the California drought. It, I'm sitting here in Arizona. We're experiencing this as well. Lake Powell is down, I think, down to 37% of its capacity, so it's pretty low. And where I live, up in the, outside of the valley, I'm about 90 miles north of Phoenix Valley. They are building so much stuff here, it's crazy. And we only have one aquifer that supplies all the water. Everybody around here is freaking out that they're going to use up, put the capacity so high that the water is going to be gone. So the old story is old to me, because going back to maybe the 80s, where water rights and those type of things are going to be some of the biggest lawsuits and things we're likely to see, and we're moving toward that, especially if we don't get some help from nature and get some rain. So. Um, so let's yeah. So here's what I'm going to do next. I'm going to bring up one of our platforms, just because it's got everything categorized the way I'm used to seeing things. And let me get this up to speed here. And then I'll bring it up on screen. I'll come up on screen with it. And I thought this was interesting, because I keep telling you folks that the energy deal is still on. So hopefully you can see this. Comment please if this type is too small. I'll zoom in a little bit. But this is our platform. So there's we have coal stocks right now up 82% since October. We're looking at integrated oil up 31%. Oil and gas operations up 41%. This is on an index level, and I'm going to break this down. The oil well services up 52%. So let's just go into let's see what comes up. There might be some of these that are on categorized, but here's an interesting one. Peabody Energy, BTU. You guys know that stock, because I know that it's been asked in when we do our stock review. That stock we bought back on 12/14. It is now up 302%. Our models issued a buy signal on 12/14 of 2020. And I've been talking about this energy trade. You know, it's a sales pitch, but you guys should have this platform. It's $3.18 a day. One of these trades, I could show you Clove Health, all of these. We already owned all this stuff before these things blew up. So the point is here is that some of these symbols have moved really big. There's only a couple that aren't long, but you can see the ones that are just all pretty good. Let's see this last one, ACC, that is only up, just started the trade 50 days ago, but all these other trades are up big. If I convert this over to daily and I look at the short-term trades, and we go to energy on this, and we just look at the short-term from a cycle standpoint, there's been some new buys recently in the coal. This is from an index level. Oil and gas is up 1.2. We've got oil and gas operations. Let's go to that. Take a look at those stocks. So there's quite a few stocks here. These are the breakdown. So I don't know what this company is. I don't know. I'll have to check the data. But Gulfport Energy Corp up. This has got to be a bet. Let me look at something here. This has got to be, yeah, this is some bad data here because it's up 22,000%. So there's a bad piece of data in there. That was a company just came online, so it's not up that much. But there's a lot of stocks out here, APA Corp. A lot of these stocks have some serious upside. Braxis Petroleum is already up 55%, and that's in 16 days. So there's just going to be all of these fossil fuel companies, there's going to be substantial amount of opportunity here. This thing is not over. In fact, it's probably beginning because we're going to see, this is what I was saying in my earlier rant here, is that there's going to be a lot of winners and losers. And this actually illustrates this. When I was doing the commentary last night, I ran across this. I did a short video because I knew I was going to have time to go through a lot of the details here. But there's some insane opportunities, I believe, here from the standpoint of some of these indexes. Even oil well and services, there's quite a few companies, especially when you break down on a daily basis, there's quite a few signals that have come in, and there's just a lot of opportunity here. And as far as timing the market, you folks look at my PPMs that I talk about. The entire process that I do on this channel is I'm about to reveal that, and I will tell you more about that later. But I'm telling everybody, go to kendallreport.com, give us your email address, because the only way you're going to find about these offerings, I'm not hyping what we're doing or telling you what I'm doing on this channel this way. That's not what I want to do here. I want to stick to the markets. But if you want to find out this stuff, I think it'll be worth your while. Find out about it, because there is some, at least from my viewpoint, something I've never done in the past that I think is going to be valuable. All right. Yeah, so just a question here, and it's a good one. What do I think oil price is going to do to the airline industry? I think they'll just raise prices until they can't. And there's a phenomenon going on that people have been locked down. They're going to want to travel, okay? And at some point, they're not even going to care how much it costs after being locked in. They're going to pay to a point, right? It'll start to impact at some point. But I don't think it's going to have a huge impact, at least not at the moment, if people want to travel. I know there was a ton of activity last weekend, again, at the TSA channels. I believe there's a website you can go to. TSA has a channel that tells you what the daily activity is, and you can see it's way up. It's getting back to normal. It was interesting. I got my haircut yesterday. It was nice to get a haircut without everybody having a mask on. So it was kind of nice. I haven't been in for about 5 or 6 weeks, so that was nice. But the point of as far as what's going to happen with airlines, I don't see a big impact. They'll raise rates and prices, which they've already started doing, and that'll just go on until it gets to a point where it starts to restrict things. It's the way it always goes. Yeah, and Brian says energy plays are going to be incredible in the next 1 to 3 years. This is going to be 2008 all over again. Could not agree more, Brian. That's what I'm trying to tell you folks. I told you back, just if we went back to a couple levels and we went back to the weekly energy models. This is why I told you folks. I go through our daily database every day. Let me bring that up so you can see it. I go through our database every day, and this is why I go through this stuff. I mean, there's a tremendous amount of opportunities. We watch 16,000 items, so we can hone it down and alert you to this stuff. And there's so much money out there, but you're going to miss half of the good stuff if you don't have a way to find it. And so this stuff here, we're looking at, like I said, just going into any of these categories. coal, oil and gas operations, or oil well services, there has been tremendous opportunities, and they're just beginning. This is not they. This is why I tell you that you can go in and actually troll the administration and the choking off of the U.S. oil, but from an investor standpoint, okay, they're doing that. Who's going to win by them doing that? And it's going to be, it's going to be these oil companies. Because there's only, like I said early on in my rant, there's only so much they can do. They can shut down new production. That's pretty much it. What's out there, they're going to have a hard time. Maybe they get some radical in the EPA to try to shut stuff down, but even then, it's going to be minimal. If all you have to do, I grew up in Chicago area, and right outside of Chicago is a place called Whiting, Indiana. I used to call it the asshole of the country, because you drive through there, it's just one refinery after another, and that stuff still exists out there. And there's, like I said, fossil fuels are going nowhere, and they're going to be a big opportunity. Yeah, so I think let's see, who was this that said something. Yeah, so Leslie, you did sign up. It's not out yet. Thank you for signing up. You will be getting some information. Like I told you, if you sign up for this thing, we're not spamming emails out there trying to do stuff. I'm working on a very big project. So thanks for signing up. I appreciate that. Somebody said people will stop paying taxes in green energy companies, which are nothing more than communists, will go bankrupt. Probably true. There's going to be a lot of challenges here on so many things. But for right now, I'm focused on energy. I think that's a play. I think what Brian said a few minutes ago is we're absolutely going to see a 1 to 3 year boom in this area. I don't know how, we're going to go through crude oil. I'm actually going to go through that next. And then my plan is, once I get through this whole oil scenario that I'm playing out today, is I will go through and we'll go through the indices, and I'll get through the metals and some other things that I do every time we do this. How late are we in? We're almost an hour in. So appreciate everybody staying on board with this and talking about this, because we talk about indices all the time. We do what we do, but every once in a while there are opportunities that just show up that need to be focused on. And you folks only have known me for a year or so. Those folks that are out there that have known me for a lot longer know I have been magical about finding these opportunities and these 1 to 2, 3 year plays that happen out there for you to focus on. And I think this theme is the big one. It's actually, if you think about it, it's the opposite thing that they want you to do, right? They want you to think it's all clean energy and it's this, and that, but it's not. The winners are going to be the other guys. There will be some clean energy winners. I'm not playing that down. Jay, I don't know. Let me put something up here on another screen. So, hey, Jay, if you could Skype me the name of those clean energy portfolios, I would like to bring those up. I just want to see how they're doing. For some reason, I'm not seeing them. I'm not seeing them on this list here. I thought they were right here. Maybe I unsubscribed to them. So anyway, if you could do that, that would be awesome. They might have some other names. I'm just looking at some of the ESG, all of this stuff that kind of plays into this. That's why I'm not seeing it. Thank you. I was kind of going crazy there trying to find it. Okay. Yeah, it's interesting because I wanted to see how this goes. Okay, all right, folks. Thank you, Jay. I've got our portfolio expert platform up, and it's interesting that these clean energy, we're not seeing any real trends here to speak of. I'm going to go through and take a look at what's open on this strategy right now. There are some pretty big winners, it looks like. So I'm going to zoom in on this, see if I can get this to so you can see what's going on. All right. Let me see if I can get some names here. And there's not a lot, there is some pretty big profits, 178% on some of these, but we don't have a lot of percentage currently long in the symbols. We have 27 active symbols in this strategy. Right now we have 25% in cash. So it's reasonably invested here, but we are running, this is what we call a multivariant strategy. So most of the symbols are in play here. It looks like going back to entry date back to September last year. Tesla's in this clean energy, and that's been long for a while. But I'm just kind of curious to see if any of these strategies were really doing anything. And this is Tesla versus the index. But if I go to First Bridge, the blue line here on this chart, hang on, you can't see it. The blue line on this chart is that clean energy. So clean energy has been giving it up pretty much since the election. So this is I guess the farce of it all is that there is no money really being made in any of these stocks. And if we should probably build something. I don't know. I think I have something. I don't know if it's in this particular. I just want to look and see if I have it on this account. It may not be. Yeah. So this is interesting strategy as well. I'm going to show you, and this is how simple it can be if you own some of this stuff. Still stuck on the energy trade here, but this portfolio only has 4 ETFs in it, and if we look down at the bottom here, it's up 50% this year just on 4 ETFs. I'll show you what's in here. So it's got FXN, VDE, XLE, and XOP. That is the current, and most of these positions go on back in November and December when I was talking about the energy trade coming on. These are the things that I started to see come on. You can see right now percent profit on FXN 70%, BDE 53%, 49% on the XLE, and 85% on XOP. So this is, they're just, and like I said, I don't believe this thing is anywhere close to being done at all. And so this is probably the first stage. If we were to go and dig into some of one of the things that we have on our platform, we can go in and take a look at something like what we call a trade profile. And I think this is going to be somewhat, see if I can zoom in on this real quick. Yeah, so if you look at this, one of the things that we have in our software is a profile. So this particular instrument holds 205 days. We're about halfway through, 116 days. The current Uh, P&L is 49. The projected mean is way above that. We've exceeded both the standard deviation and the projected profit that was issued on this. So typically, this thing makes 13% and has a downside risk of about 8.5, 8.9. So it's about a 2-for-1 risk. But in this particular trade, this thing just exploded, and we're seeing unbelievable returns. And so this is why I continue to be really looking forward to as far as the energy goes, because I believe that that's exactly where things are going from that standpoint. So anyway, yeah, I think I digressed back in there. Yeah, Floyd's Garage. I absolutely. That's exactly it. And matter of fact, in um, trying to think what year it was, 1974 or five, uh, maybe 76. We had a band. We had a cover band that we were playing in, and we called it Glacier because on the front of Time magazine that year was the coming ice age, and they had pictures of the city in New York City with these giant icicles hanging off all the buildings. It was pretty hilarious. So that was what they were predicting then, was the ice age was coming in 1976. You can actually look, it was even 76 or 77. You can go in and look at the ice age. You can Google ice age Time magazine, the coming ice age, 1976, 74, somewhere in there. But we named our band Glacier because of that, because it was such a joke. Even then, it was obvious that you're not what was going on. So okay, so let's dig into some of these technicals here, and we'll start to get into our typical live stream here. Just let me look. Yeah, I will go through. You know what? Let's stay on this theme just for a second here. Let's go on to. Let's just stay with the oil thing since we're so deep into this right now. Let's go into crude oil. A couple things here, and this is part of the announcement. This is ppm 1, 2, and 3 and the market grid on crude oil futures. And this is why you want to sign up for the Kendall report and find out about this and some of the other things that we're working on and putting out in TradingView. It's been a big project. It's bigger than I thought it was going to be. Thought it was going to be easier, and I thought it was going to be, the old famous words, it's never easy. That's pretty much it. So there's a number of things that protecting IP, intellectual property, those type of things that have been somewhat of a holdup. But as we look at crude oil, there's a couple things we can do here. We can go, and here's our negative move that we see in the middle of the page here. But the PPMs are currently all very positive. This is a weekly chart. We can go over to monthly, and unfortunately, this chart gets really skewed because of that negative deal that was on there. Let me go over to TradeStation. I think I can get a better view of that. There's some weird charting issues with the HTML5 charting module. I think I said I'm impressed with TradingView, and I'm unimpressed in other areas. There's a number of issues with dealing with it. But let's go ahead and let's go over, and this is daily. Let's go over to monthly. You'll see that same spike, but you don't get the crazy view that you get on the TradingView. But this is something that we'll just stick. We're going to go all the way through crude. I guess that's the right thing to do here. So crude oil is probably heading toward its 200-day moving average, that 200-month moving average, which is 108. I mentioned these numbers last night. I'm going to put some studies up here. I'm going to put a Fibonacci tool on there. And I'm going to go back to weekly time frame. And this right here up at the top that you'll see cyan, yellow, and red dots. And you see the numbers 91.15, 104.08, and 112.06. This is the Fibonacci projections for this next sequence to the upside on crude oil. Now we're trading down a little bit, 69.92, but the momentum is, what's nice about the momentum is that it's not too steep. It's got a nice steady slope. And one of the things I'm going to be introducing you folks to, and in a class that I'm putting together, is actually what this angle of attack is actually all about. So I'll be introducing you to that very soon. But we're seeing acceleration on ppm 3. We're seeing solid acceleration across the board in these trends. So that upward slope is a nice steady slope that is going up. It's not too steep. It's not vertical. It's a slope that is very sustainable and is likely to go on for a number of months. And this is why we're most likely going to get to at least $75, $78 on crude oil is going to be a fair resistance point. And if we start to stay above 75 on a sustained level, then what that's going to bring in is that ugly word inflation, and that will start to come out in a big way. I'm going to convert this chart over to a monthly, and you'll see the monthly configuration has become very bullish as we look at the PPMs that are on the chart here. The PPM stand for price, pressure, momentum. They actually address the angle of attack of the markets, and it's very similar to, if you're an aviation person, you understand the angle of attack on aviation has a lot of characteristics that are very similar to that type of viewpoint from a measurement and sustainability, almost a stall rate. Everything that happens in aviation is very similar to what these indicators are looking at. Markets go too steep, they stall, and they come back in. And so when you get on these steady, very, what I call low momentum, low volume type trades, they can go on forever. They go on a lot further than you think they're going to do. And these are sustainable trends. And what we're seeing here is a very sustainable trend, both on the monthly, weekly, daily's got a little more noise in it as always, but those two levels are pointing to exactly what I've been telling you. Okay, yeah, that's helpful, Christoph. Thanks. Let me go over there and see if I can do that. Yeah, there you go. I see exactly what's happening. Thank you. I'm still learning this platform, so thanks for that. Appreciate it. So yeah, so we're back. So this is good that this is like this, because this is the monthly. What I also want to do is, I'm not sure how far back this data goes, not far enough, but this is a quarterly view. I wonder if there's a better, maybe a WTI chart that goes back farther. Let's just see. Let's see if this, yeah, this is way better. Okay. Yeah, this is awesome. So this is really good. So this is WTI. And this is also a quarterly chart. So we're back. Let's see how far back we can go. And so there's no point around 1977 when oil started floating at a freer price level. And this little spike right here up to $40 was one of my claims to fame. I was a head financial technician at a firm. We had about 5,000 reps back when crude oil was over here at $18. I had everybody in the firm loaded up to their eyeballs with crude oil. And of course, that was August of when the Kuwaiti invasion came. And somebody asked me, I used to come on the Squawk Box every day and talk to all the troops. And somebody asked me, well, why would crude oil go from 19 to 30 or 40, what I was projecting? I said, I don't know, maybe there'll be a war. And of course, there was a war. And that was a spike, and we made a lot of money. We bought a lot of $22 options that were out there at the time, and we made some nice money. And I think most of that stuff was sold 32-ish, and so that was a big trade. But we go back to 2007 and all this craziness, right? So this was 143 on WTI at this time. I think 143.67 is the high. Not sure how this is being calculated, but you can see the drastic move that we had all the way down into '08, where we ended up at $35 a barrel, and we've just kind of waffled around. So if you look at crude oil and the history of the prices, there's a long ways to go. And this level back here was back when we were around $91 last time. And this is awesome that this is one of the things I do like about TradingView is that there's a lot of charts you can go back. They have some great historical chart availability. So what we're seeing here is actually a very bullish pattern on a quarterly chart. So these are all every 3 months. And we got the big reversal off the negative numbers, of course. But this is the pattern we're seeing. The PPMs are just very strong on a quarterly basis, which tells us that going up to 90 to 104 is going to be a joke. We could easily get up to some much bigger numbers. We could easily get to 125, 130 if things got crazy. But I think 91 to 104 will at least be the target. That's going to set up a lot of opportunities, and those stocks that we went through earlier, all that stuff. So, I've did about an hour on this stuff. So I think that's pretty much unpacks it at a pretty good level. Yeah, so that was kind of interesting. In fact, the invasion of Kuwait happened on my birthday, and the war started on my brother's birthday in January. So that was kind of interesting. So there must be a connection there. Okay, so let's go back and let's go through the indices now and get into typically where I go through and try to. So probably for the next hour, it's going to take me to get through a lot of stuff. Now I appreciate that. Yeah. So yeah, Christoph, you could be right. We could see an all-time high. I think this thing's going to get pretty messed up. So I try to just go as far. So just so you know, there's no point in making those type of predictions. All that matters is what we can see in front of us the next 2, 3, 4 months. That's what we can trade. You start to get, I talk about this a lot, the further out the projection or the prediction, the less likely you're going to be right. Okay, it's very, very hard to predict the future, but you can predict based on technicals and some quantitative stuff, which I do. You go out a few days, a few weeks, and a few months, and that's all that matters from a trading viewpoint anyway, especially in anything anybody's doing options. Everything's going to expire. So yeah, let's see. let's do something here. I want to go over here, and I think see if I can get this. Yeah, I don't know if anybody knows. This is a consumer discretionary index. If Christoph or one of you guys know, what's the symbol for like the consumer price CPI? Let's see if it. Yeah, this comes up as a stock. If you know that symbol, it'd be nice. Maybe I can look at a chart, but I do expect to see this thing get up to, you know, potentially up into 6-7% inflationary pressures. Right now, we're still running in the threes at four, so it's definitely going to go up a lot. Um, I'm really all over the place today. And I'm just going to go over here to daily. Uh, this is lumber prices, and a lot of folks are talking about lumber. This thing is most likely bottoming here, and there's lumber has an interesting fact. People are trying to draw conclusions to the lumber that it means something about the economy, and it really doesn't, because a lot of the mills got shut down in the Oregon and Washington State, and a lot of things got shut down. And I know a lot of Canadians are making a lot of money off of this, but there was a shortage. People backed off on some of the projects. A lot of things have happened, but it's going to remain high. So we're going to see this thing cycle. I actually was looking at the possibility of this thing bottoming sometime in the next week or so. If we look at the weekly charts here, we're coming down to a 21-week moving average. PPM still up at 2.7, so it's pretty substantial. We should start to see some stability in that market. All right, let's get into the indexes. So we'll start off with the S&P. And I'm just looking at some comments here real quick. Yeah, I don't know who David Hunter is, but I've been talking about the S&P being a place. This will be your inflation hedge. I do see it going up substantially. You know, literally maybe as 6, 8, 10,000 on the S&P is a possibility. And you know, it's as long as you've got the folks out there like that don't believe in this thing, it's going to go higher, right? So let's. So is that, Eric? Is that the symbol for TradingView? I'll try that. Total return, yeah. Anyway, yeah. So let's go back to TradeStation. Let's just get through the indices. So one of the things that's happening here, which I've talked about on the channel every day, is this narrowing of the market grid is somewhat concerning. We continue, at least we're staying above 4,200. We were getting rejected around 4,230. We saw another 37 high. I believe the high is 38 and change. So we basically traded up to the ATH again, and we're still seeing this thing go. But what's happening is the PPMs are trying to turn up again, and that's what will end up to be bullish. I think this thing's going to go sideways and then start to accelerate, and it has everything to do with why we spent all this hour and change talking about energy opportunities in fossil fuel energies. You notice we didn't talk about solar or any of that stuff because it's really is not relevant at the moment, especially with everything that I talked about. But this index should continue to go up. We're actually seeing kind of the markets at a normalcy that we're not used to seeing, right? We've got a 11 handle range on the SPX today. I mean, that hasn't happened for a while. One of the metrics that in the past that I used to talk about, when the daily grid indicator gets under 10, it's almost always a sell signal. So if I go in here and let's just see where we are right now. We're looking at right now I need yesterday's close. So yesterday's close was 27.50. Yeah, it's still up there in the 20s yet. So if we continue to contract and we get these 11 handle ranges like we have so far today, then that is going to become more dangerous, and there's going to be downside possibility of going at least down into these moving averages that are on here right now. 41.75 is both the 21 and 40-day moving average. That's going to be about it from that standpoint. Bear with me 1 second here. Sorry about that. I am in Arizona. It's getting hot in here. For some reason, the air conditioner didn't kick on, so we're back. But yeah, this grid tightening is a significant event. Let's go to the weekly. And weekly, we still have valid projections for a minimum target of 40. You see it over here, 4605. 5139, 5468. So these numbers are still in play. They're still valid. They actually were first projected. I did a video last October, and it was called New Fibonacci Projections Revealed. And you can go back and watch that, but this was where the numbers came from. They came from this indicator, and we continue to move toward these numbers. So I've talked about 4,400, talked about 4,600. These numbers are still in play here, and the PPMs are at that maintenance slope that I talk about all the time, and that is these indicators. The PPMs actually are in what I call trend mode or trend maintenance mode, and that upward slope. Let me just draw that in. This is what's going on with these markets right now, is that this upward slope continues to be dominating. I'll just draw these in. It's a very minor slope, but they're they're higher. So this is what I was talking about earlier. This is the trend maintenance mode. I'll draw these in. Some of these colors are similar to the lines in there, but let's just draw that in. So all of these maintenance are going to continue. So the upward slope of this from this basically flat line to here, this is your angle of attack right here that's measured basically from here. So some folks, you could draw a trend line on this thing, but this is really the angle of attack, and it's being identified by the numbers here. So at a 0.50, 0.55, at a 0.53 on ppm 1, 2, and 3, what that's telling us is that this is a very sustainable angle of attack. And this is on an intermediate basis. We're going over to the monthly charts now, and you'll see a steeper angle of attack than that is there. But let me just draw that in as well. And the same things happen on all these levels with these ppms. And it's very powerful to understand when you're doing any type of trend following. This is exactly what you need. This is how the trend's being defined. I'm just drawing these lines here, and these indicators down here are showing what the angle of attack is. So if we drew off a baseline here and looked at this, each one of these have a different level or angle of attack that they're presenting, and they all are currently, as I mentioned, on a monthly basis, 1.95, 1.77, 1.22. This is a huge number as far as the trend goes on a secular basis. So this tells you, we're a long ways from rolling over in this market, and these ppms, the moving averages, aren't easily influenced. It takes multiple months to get this going. Yeah, and I saw somebody, I think early on, somebody was talking about, the reverse repos and all those things going on. And that is, I saw a comment here that just kind of triggered, and I'll go through, we're going to look at interest rates here in a few minutes. But this is what's going on. They're trying to sap up some of this extra liquidity, and I don't see that as any kind of panic. It looks pretty normal as far as that goes. Yeah, that's funny. Red Rocker, that's interesting. GME announcing they will be a crypto bank. I haven't heard that, so you're the one that's revealing that. But I've told you that GME was going to reinvent themselves, and they won't be a brick and mortar GameStop won't be GameStop anymore. But anyway, so I've got that through. Same configuration. I'm just going to talk about it quickly. Same configuration on the NASDAQ. We've got this big upward slope. We do see some burning off of the slope here. The ppm1 is starting to fade a little bit, but these are really big numbers that are out there, and I'm just going to skim past some of these so we can get to the next level. One of the things that is out there on the intermediate, I still have the Fibonacci projection tool, is that if I come up here just a little bit, you'll see on this scale here that there's a target for 15,156 on the NASDAQ futures, 16,286, 16,984, basically that's these areas. There was a previous projection here that was suggesting 16.4, so we're likely to go between these two levels right now, between 15,156 and 16,286. That is likely going to be the thing. Yeah, so just a quick comment here on, oh, that's interesting. Hang on. My camera actually follows me. It followed me around to turn the air down. So anyway, make sure if you guys are new here, subscribe. We're getting close to 30,000 subscribers, so I'm excited about hitting that number. The other thing that now that it looks like humans can congregate again, I'm hoping that sometime early next year when it's really cold wherever you folks are that's cold, that we're going to do some sort of conference or something out here in Arizona where us humans all get together and congregate. That'll be really fun. So yeah, checking in from Cabo Wabo, tequila in hand. Well, enjoy. Wish I could join you. So but as we go through, let's head over and let's talk about the Russell, because this is something that we're seeing. The Russell is actually getting up to the extreme for the week. We're down a little bit today, but we're getting up to the extreme for the week as far as the market grid goes. And you see here that the high end R3 2339, RXT 2356, high 2350. So we're trading right into the RXT level, and we've got some solid support and momentum on the PPMs as well. So even though this is on a weekly intermediate trend, even though they've been flat for a number of weeks, we still have that underlying acceleration. And I talk a lot about this, that oftentimes that the intermediate trends are what are driving the markets, and that's what's been driving the markets for sure. The short-term dailies are just all noise right now. So that's certainly very positive as we look at it from a weekly standpoint. I'm going to bounce over real quick just so we can look at the Russell NASDAQ spread that I've talked a lot about. I think this thing's going to stall right in here. This is going to be a critical level. The next 2 to 4 sessions, I'll be watching this closely. If we can get above this point over here, that will suggest we're going to get a further acceleration. This is where the rubber meets the road, and we may see a slight rotation back toward the NASDAQ here over the next couple of days if we don't break through that level, and we probably end up just going sideways here before we're going. And one of the things, a theme that I've been talking about on the channel has been that we're really looking at markets just kind of switching back and forth in rolls as we climb this wall of worry, or this very low trajectory from a trend standpoint. But make no mistake, these things are all going up. Whether the NASDAQ comes back in or play or not may not be the case. I've talked a lot about that. Excuse me one second here. I just have to get my camera to kick back in. There we go. But the patterns that are unfolding on all of these markets, on all the major indexes, are still positive, got upward slope. Trends are going to continue. I don't see a very low risk level on the downside. Probably the 21 and 40-day moving averages on all the on all of the indexes are going to be pretty much the bottom of what I would expect from this standpoint. Okay. Let's go to the 10-year, because I think this is going to be interesting. We're trading down to the 21-week moving average, just below it actually. We're at 1.489. As I mentioned early on, the fact that the interest rates are not showing any sort of current expectation of inflation isn't really that important, not for the moment. but we are coming into a range, I believe, that are going to be pretty significant. The ppm2, which tracks the 21, is up at a 1.26, and we have a negative ppm1, which is at 1.59. So we're sandwiched between 1.6 and on the downside right around where we are now, 148. I wouldn't be surprised to see this thing bounce back. This is the weekly graph. One of the things I'm going to point out here, which is somewhat interesting, is that there's some Fibonacci targets have just been issued this last week for rates to go to 27.32 or 2.7 to 2.32. That's an interesting projection. Just like I showed you a little bit ago on the S&P back in October, we'll see if this stays validated for a while. I think it will. If it does, I'll be talking about this over the next several months, that rates are starting to project much higher. I've talked also that this 194, the 200-week moving average, is pretty substantial resistance. So I do believe we're going to stay in 144 to 165 range for a while here. I don't think there's any pressures to actually push this up a lot or down much more than it already is. Just take a quick look at the daily. It was interesting because we did get a cycle that came in yesterday. The next 2 days on this cycle event will be important. If we stay below the low of yesterday, which would be 151, which we are at the moment for 2 sessions, then this could be a high cycle and we could start to move down. Some of the downward projections on this is for the minimum target's 149, which we've hit, and the medium target 143 to 1.4%. Go quickly. I'm just trying to get through a lot of markets here, and then we'll get into some individual stocks. Yeah, Zach, if you give me a good symbol that I can bring up in Trading View, I'll go through look at the Chinese. I'd like to look at that. Yeah, I actually don't have much. If you ever hear me talk about a Head and Shoulders, you'll know I've lost my mind. That's not to offend, but one of the most amateur patterns ever developed. Don't read Edwards and McGee. You'll gain nothing. Okay, so the Dow, we continue to just stay in a sideways slope. I want to go to the weekly. There's really nothing here on the daily. This weekly downside, 88.82. Talked about the big number is 89.29, and then the next level is 86.80. Those are really big numbers. And as the Dow stays above that, then what we're going to see is potential with all this money being created that it ends up to be pretty bullish, and that probably ends up driving the indexes, the stock indexes higher, and so forth. This is a critical level. We look at there's Fibonacci projections here for 88.82, 87.06, and then 85.96 puts us down to that 86 handle that I talked about a minute ago. On a monthly basis, this is pretty critical, I think. We're looking at the 200-month moving average is right now 86.95, so we'll call it 8,700. We look at the market grid for the month, what you'll see here is the extreme is 87.30, 87.90, 89.25 is S1. So far this month, I don't think we've been anywhere close to that. The 89.66. So we got close to an S1, but we did not print through 89.29, which was an old low of significance. And then, like I said, down at 86.90, but we'll call it 8,700 is going to be the next level, or that 10-month moving average. Somebody's asked me what I think of William O'Neill and IBD. I've had a lot of customers use IBD, and over the years, I mean, it's fine. It's a good theory. They've got some really good technology they built around that concept. So there's some good stuff there. What we found is if you apply our trends strategies to IBD metrics, and you can actually do some pretty good things with that. We've had a lot of folks build IBD strategies over the last 20 years for sure. Okay, that's the Dower. I thought we're going to take a look at Bitcoin here real quick. And it was interesting. I think it was on Raw Paul, following him on Twitter. There was some guy going, folks, Bitcoin looks really, you have to admit it looks like shit. And I said, well, the definition of a bottom is two things. One is a bottom is about as bad as any chart can look, and an absolute low is at that moment when you look at a chart that's printing the absolute low, it couldn't look much worse. So if it looks that bad, it's probably a bottom, is what was my reply to them. And so far we're seeing a bit of a bounce. The 40-week moving average here is what was driving that comment for me, as we're still at a positive slope on this. We're at 1.93 on that 40. My guess is we'll stay within the grid. We'll see the 10-week moving average start to drop pretty drastically, coming down into around 41, 42 handles. So we should see Bitcoin probably bottomed here around 33, and is likely to go back to around that 41 level. And there's not a lot more than that there. As far as if we go to Ether, it's sandwiched between 1021 simple moving averages. That'll be your trading range for that. We trade a little bit above that. This is weekly, on a weekly basis. That should be your trading range. PPMs are still positive, so that slope should maintain things. We could even see it rebound back above the 10-period moving average right now, 2706. And as you folks know, depending on what exchange you use, these moving averages could be a little different. And so we'll leave it at that. All right, let's do gold, because I promised to go in depth on gold, and then we're going to move on. And what time are we getting to be? Yeah, about then I may take just a couple-minute break, and then we'll come back and we'll hit some individual stocks. I see folks are starting to throw some stuff out. So gold on a weekly basis, we just continue to be sideways. The upward constraints right now are for around 1937, 1948 is extremes. We look at the market grid on a weekly basis. I talked about this a lot in overnight in my daily videos. 1904, 1917, major resistance. Those are market grid numbers for this week. On the downside, 1879, 1866. We're locked in that range. And one of the things you can look at here from for some perspective, 1847 is the 40-week moving average. I don't see us getting below that. In fact, I think 1850s would be an extreme if there was any kind of spike. What I'm expecting is at least 2 more weeks of sideways movement on here. Let's go to the long term so we can just talk a little bit about that. I mentioned this in Monday's video, is that we did get an RXT sell signal. That's when the market closes above the RXT value, which is the extreme projected for the month. So we did get that on a monthly basis. Just look at that number real quick. RXT 1882, we close at 1909. What that suggests is we typically will go back to an R1, R2 on a monthly basis. So that would put us between 1884 and 1855 on a sideways. So far this month, we've been down to 1855. So we've seen an S2 already this month. And the upside 1919, R1 is 1935, goes in line with what I was just talking about, and as far as those numbers go. Yeah. So, Christoph, tell me the symbol for TradingView. I'll look at gold in the Connect hour. Yeah, it's not going to 16, 20,000. Not going to happen. Hang on a second. That's what I thought. Let's try that again. There you go. So this is gold. This is weekly. PPMs, similar numbers as far as that goes. The 40 period moving average is, what is this? Weekly is going to be major resistance. That's at, I'm just not used to looking at this. One sec. 2341. So these numbers aren't going to make much sense to me, but you're probably sandwiched between the 21 and 40 period moving averages in there. But this overall is a pretty positive look. Looks like we want to go that. Maybe that says something about the U.S. Canadian more than anything else. That may be the bigger influence on that. So let me just. This is daily. Similar pattern, just different numbers. PPM1 is still is negative slightly. Yeah, it's very similar numbers. I don't see the configuration should be the same. Just the numbers are a bit different. The market grid numbers. Let me just put the market grid numbers. S1, 2286, 2279, 2272. They're on the far right over there. So that would be your support numbers. The 21 period moving average is at 2272. That should be major lows there. So what do I set this thing on daily? On auto or the percent? I guess. So is auto just the press on this thing? So yeah, so I do think it looks good, Christoph. I mean, it's same thing. It actually looks like a little stronger pattern, just maybe because of looking at the influence of the Canadian dollar against the dollar, maybe. That might be it. Okay, auto. Okay, thanks. I've watched way too many YouTube videos on Charting View trying to learn this thing. It's just not as intuitive. TradeStation's much easier to use, maybe because I've used it for 30 some odd years. So, okay. I'm going to put this chart up for a minute. One of the things I thought was interesting that we've seen over the last, this is monthly, let me go to daily. We continue to trade around this 6 billion share range. We get a couple little spikes up around 7.2, but I just mentioned on volume, this volume is so steady. This is what's driving the trend. It's just very steady volume. There's no big spikes like we've seen on 127. Some of these spikes where we're seeing numbers, get up to 13 billion, some crazy spike numbers. Those tend to be climactic numbers, but I'm really impressed with the stability of the amount of volume that we're seeing here. Let's go over and take a look. We haven't really looked at a snapshot of the markets for a little while. So yeah, we're only up 25 cents again. What was the high in the futures? 35. We're back at 26. So we're 9 handles off of there. So just kind of drifting around from that standpoint of the markets. Yeah, Christoph, send us an email. Send us your Skype, and I will actually do that. Okay, folks, let's take just a 5-minute break. Come back. I need to refuel, get some more Runa flying, and then we'll kick it back in, okay? So hang with me for just a second. It won't be 5 minutes, it will be 2. Okay, folks, back to it. Uh, let's find out a little bit. I see some of you have been posting some charts or some symbols that you want me to go through. Any questions about anything that I've talked about so far, if you've been on for a while, just to try to get to any questions, make sure I've covered everything. I've had quite a bit of thoughts on the energy markets, anything like that, just let me know. If not, I'll start to solicit some symbols for you guys for us to look at. I'm just looking at some of your comments here. um, 1 second here. Yeah, I think I saw a comment on XOM. I was just looking at it on the other screen. it looks to me the dailies are out, but the weekly models are still long. So if you're playing on a short-term level, possibly if you switch over to, let me just look here, 1.2 model, let me bring that up so you can see it. Yeah, 1.2 is out too, so the weekly models are still long, and we're not really seeing any activity on the shorter term models. So I would wait for a buy, even though it's trading at these highs. The Exxon weekly has been long since 39, and so it's still holding that. So one of the things that, just a quick comment from a WaveTech viewpoint, is one of the things that we've been telling folks, you definitely want to be rotating to the weekly models. There's so much noise in some of the short-term models right now. They're kind of in and out. There's a lot of grinding going on at these higher levels. So you're probably going to be better off following some of the weekly signals, or at least adhering to those are going to be some of the best places to go. Okay, so let's just put up, let's go, and they're getting some comments on GME. GME should be being traded on the 1.2 model. It's long from 172. As far as where is it going, we got a peak up here. Let me go over to TradeStation and bring that up. Yeah, we're getting selling again. Look at this, S&P down 325 now as we're working a half hour to go. So just can't maintain this thing up at these 30 levels. So we're getting rejected. We keep getting rejected around 42.30 actually. It's kind of interesting. We're going to have to keep a close eye on this, as well as the contraction that I talked about earlier, as we're looking at a range right now, 14 handles, trying to expand the range a little bit on the downside at the moment. It is doing that. So anyway, let's go over here and just put GME on TradeStation. This stock, you know, it's definitely an uptrend. I'm going to have to try to move some of this stuff out of the way here just to get a good context on this. Yeah, PPMs are up in a 4-point handle, 3 handle, 2 handle, which is pretty positive. We spiked above the market grid yesterday, but we're trading right up to the range. Right now, I don't have it on screen, but the R3 is 327.94, high 328. So we traded right up to R3 today. It looks to me this thing will continue to move higher. Maybe we can go over and look at a weekly on GME. GME is actually spiking above. It's trading right at the RXT number 312.56. So 312.21 is right where we're trading right now on GME. So we're at the extremes for the week on this thing. So maybe we'll back off from here and just stay up at these ranges. But the short-term trades, all that stuff looks like it's still positive. Let's go to AMC because I know that's it's interesting. AMC got a weekly RXT. We're trying to come back in, probably heading toward maybe 42 handle on this one. Start to consolidate sideways in this range. Let's go to a daily real quick. AMC daily support is going to be at the 10.4268. So everything's pointing to 42 handle on AMZ. Thank you, Derek. I appreciate that. Yeah, we'll cover CVX and Apple. We'll do that. And I want to show you something on, Derek, just yell at me. I'm going to cover a couple things here, but I'll definitely get, I'm making sure I get it down, Apple and CVX. Okay, I want to show you something on my girlfriend Kathy. Let's go to Kathy's Casino, and it's interesting that we've been getting a lot of buy signals coming in on the short-term stuff. Let me open this up so you can see this. Let me know, is this big enough on your screen that you can read any of this stuff? Do I need to zoom in? Just let me know about that. Gary, yes, on that, on the PPMs. Yeah, we're still having upward slope. Downside risk is to 4175 on the S&P. Okay, that's what I was. Let's zoom in on some of these numbers just so you can see them just a little bit. So these are the symbols that are being held, and we're seeing a lot of. Let me go to portfolio orders. So these orders were for today. We had a new buy in HUYA, IOVA. And then we sold Teradyne, TER, on this one, I believe. But we also had a bunch of reallocation sells. So what's interesting about this is these numbers right now, we've finally moved up. We were only about 27% invested in the Kathy Casino stocks. And now we're 35 or 98% invested on this portfolio, so it's starting to participate just a little bit here. And we look at the, let me go over here, look at the equity curve on this thing. See, it was pretty drastic here. The green line on this, you can't see it. Hang on, forgot I was zoomed. The green line on this chart is the S&P. So Kathy, these stocks were way outpacing. I think I can do something interesting here. Let me just go to see if I can find the right portfolio here. So this is ARC full list, and then I can do ARC K. Yeah, don't have a good map for this. Sorry. I thought I could bring up some things that would be interesting. And looking at these strategies. Yeah, we've been able to add a little value to these stocks. This is the green line is what we call multivariant trading. The blue line is Kathy's full casino. And so we were able to mitigate some of the risk in these stocks. We've flattened out this this big curve when she was down 22%. Looks like worst we were down were 7. So she's catching up, but we're starting to get some traction on this thing. And really this strategy is trying to mitigate some of the downside risk, because this particular strategy, the ARC K, has a beta on the downside about 3 times the index. So it's pretty pretty difficult there. But as far as if we go and just look at, we put on I think an optimized daily, and we just go to the K, you'll see down below this symbol here. We recently bought, actually I want to go to 3.2 here. 1 second, bear with me. Yeah, it's been, we sold out at 151 on ARC, and now we actually bought in, made a small profit, and it's back neutral. So maybe we'll get another buy-in, but it'll be interesting. The way the PPMs are setting up, they're starting to indicate that there's a bottom here on the ARC funds. So if we go over here to ARK, this is the daily. Still trading right around the 200-day moving average. You know, these things are destroyed. The probability of seeing a new high on this ARC K is minimal, I think, for a while. It's going to take a while to repair the damage that was done to a lot of these stocks, and especially from a fund standpoint, the way she doubled down and tripled down on some really bad stocks, the fact that they were cheap didn't make them good. That's an old saying that I've had for a long time. Cheap doesn't make a stock good. And I know, I don't know how many people are going to be able to buy into her 3 to 5 year outlook, and that's why she's buying things. So anyway, we'll see. Let's do Apple real quick so I can get that done. Apple's somewhat interesting. I'm going to come over here to, on a short-term basis, I'm going to go to our platform just so we can get a kind of a similar pattern where we're getting these whipsaws here on a short-term basis. Let me put this on a daily 1-2. I'm just trying to see if there's any models that fit. Yeah, this is probably the better model. We did have a decent trade here. We're currently flat. Don't have any new trades in Apple right now. I'll go over to TradeStation and cover it there. This is really, this thing looks like it's going to struggle a bit here. I don't see any real upside. There is some minor targets on the upside, 128, 130, max 132 on the upside. Maybe if it got above there, we're seeing the PPMs trying to turn up, but there's not a lot there. Let's go to weekly real quick. Weekly has kind of this picture, 153, 168 intermediate potential projections, which would be an all-time new high. I don't see that happening right now, but we do have a positive PPM1, but it's very mixed. So I think Apple's going to be locked in its range for a while here. Let's do CVX. Do have some upward objectives on CVX at Let me just get this up here. Minimum minimum 129 to 140 is the upward range on this. So all the stuff and energy I talked about, I think this is going to be a pretty good stock. This is the weekly. Let's go out on a longer term. Let's go out on and take a look at this. Yeah, so this is similar to some of the long-term charts that we looked at a few minutes ago on oil, is that we've got great upward momentum. We should see this thing continue to move out. So I think those objectives I just gave you are pretty good as far as that goes. We'll go to Etsy next. Very narrow range, major resistance right above the market here at 182, 160. 167 has some support here. 166, 167. No real uptrend on a short-term basis, on an intermediate-term basis. Very similar. We have actually a negative trend on the downside. Major resistance 184. 176 will also be major resistance. So not a lot of upside for this. There's going to be a fair amount of work before we get anything going. ConocoPhillips, another upward objective on crude oil, on an oil company. We're looking at 70, 22, 78, 77 on the upside here. Now, this is a weekly chart, so this is pretty good. We got positive PPMs across the board, so we should continue to move toward those levels. Yeah, Disney's another dead duck. Downward momentum is 0.70, major resistance at the 180 level. Don't see much on the upside. There is a Fibonacci projection up here at 226. It's still valid, but we're going to have to get well above the 183 level and stay above there to get these momentum to turn back up. Right now, you get too much negative momentum on this stock. TSM, Taiwan Semiconductor, they're moving to Arizona, so I hear. Not a lot there as well. We've got negative trends on a weekly basis. Major resistance between 117 and 121. Don't see a lot here on this. Let's do. Take a look at Tesla. I think Tesla's in a fair amount of trouble. We got minus 0.97, minus 1.55. So there is substantial pressure at the 652 level. I talked about this a couple of weeks ago, and I'm going to show you I think it was the monthly average. The 10-month moving average is at 616. It is still up positive. So around 600, 620, 580 is going to be support on Tesla. There is a cycle coming in, a monthly cycle, so this could be significant. I would say check back next week, see what kind of pattern we get. But as far as the weekly goes here, we're looking at S1 on a weekly 585, low 582. S2 is 570. So that'd be your extreme on the downside for this week. But PPMs are still very negative, so there's no real upside on this symbol. Yeah, that's a good one. Ford has been definitely printing up. This was interesting. A couple of weeks ago, we had a projection for Ford at 1633. The high last week, $16.46, so that was a hit there. We we came close to getting RTXL. We should be sideways in Ford between, we'll call it R2 1498 to R2 on the upside 1696. You should get locked in that range pretty much on Ford at this time. Yeah, there is a buy signal on GME. I see that, Wayne, for 3-2. 1-2's been in, I think, for a little bit. Maybe that's a confirmation. Yeah, here we'll go to GM. Also hit some of these U.S. motor folks. Those guys that are going to burn that fossil fuel, right? Even though Ford actually had, I saw a new product they have coming out in the fall. It's a hybrid truck for $20,000, brand new truck, $20,000, and it's a hybrid, so it's gas and electric. I think that's maybe the best way to go. As we look at this chart, though, we have very positive formation on GM. We got a nice upslope, 0.84, 0.108, 1.83. So these slopes, support is going to be around $60. So you have very little downside. On the upside, there is some projections right now for 60, 65, 69 on the upside. So it's somewhat limited, but fairly decent looking chart, really. And here's a monthly on GM, so it has been a monster if you go back to last year. And we see this thing, most likely what's going to happen on a monthly, you're looking at R2, S2 on a monthly chart, which will put us around R2 60, 640, 63, 97, S2 54. That's going to be your broad range. We'll probably we come in the next month, maybe an S1 57 to 63 on this one. It should stay in this sideways mode. Great momentum on these stocks, though. Yeah, Floyd Courage, I saw that story on Toyota hoarding chips since 2011, and they are better prepared for delivering cars. I did see that story as well the other day. Yeah, as far as CPI data, I don't know how that's going to come out tomorrow. That's going to be a reasonably big number. It looks like interest rate markets are looking at some downside, that since the interest rates are down, that they're not too I guess they're, yeah. Well, we'll have to see how all this stuff sets up. I see this. Yeah, it's funny. Old chips. Yeah. Yeah. As far as CPI goes, though, that number is going to be interesting to see if we get anything that come in hotter than expected, for sure. Let's take a look and see how the markets are trading real quick as we come into the close here. Yeah, we're selling off, so we're expanding that downward range. We're about to make a new low. 1850 overnight was the low. They're pressing them into the close here. No one wants to own this thing over at 42.30. Here we are at the low of the session. Let's stay with this for a few minutes. I just want to watch a few minutes here. So we're about 10 minutes out from the close. 1825 low of the session. So we did expand this thing out. About 17 handles on the range today. Little expansion. We were around 11 there for a while, so we did expand it out a little bit. A little buying coming in right now. Let's go and look at a couple more stocks while we're waiting for the close here. Yeah, I kind of had an energy tone to today's. So here's BP, which looks the worst of all of the stocks. But there is decent upside momentum, but there's resistance all over the place here. 33.54 would be a lucky move. In fact, I expect that this will stay with above the 10-pair moving average at 22.30, but probably stay within the upper end of the grid around 28.60 or something like that. So there's doesn't appear to be a lot of upside. The maximum would be up to the 40-period moving average monthly on that. Let's go to a weekly real quick. Weekly looks a little better. At least the intermediate trends look pretty good. There is targets right into the range I just talked about at 31, 24, 35, 37, and that would put us up toward that 200-week moving average as well, which is 34.71. So we're looking at a move maybe up toward that level. Schlumberger. Haven't thought about this one. Interesting objectives right now. 41, 23, 47, 61, 51, 56. PPMs on intermediate basis, all very positive. Nice upward slope trend. We did get an RXT sell signal last week, so another week sideways in this range of the grid, which is 33 to 39. Stay within that range, and we should start to move above that 200-week moving average and beyond. Yeah, I covered Bitcoin a little bit ago, John. Sage Therapeutics. We're about to get an RXT sell signal weekly, which would suggest a sideways range for the next couple of weeks. If on Friday, it's Wednesday, on Friday we finish above 73.71, trading 75.11 right now, that would tell us that would happen. Yeah, what we do have, we don't have Bitcoin, but we do have the GBTC. And just trying to, what this is, I think if we put 3.2 up here, Yeah, on daily, 3-2 isn't going to buy into this kind of pattern. So last trade was out at 49. What is this? Hang on. Yeah, 48.40 was the last sell on this. So no new buys on Bitcoin yet. Five minutes to go. Let's take a snapshot at the market again. Still 1825 low, 19 and change is the last trade, 2025. Looks like they're going to go out negative on the session, so we just couldn't get a positive session. We had a high of 35. We keep punching, like I said, over and over. 32, 35. We keep getting rejected up there. BlackBerry. How are these guys still in business? What do they do? I have no idea. RXT sell last week, so still looking for the possibility of getting down to S1 1275 would be a possibility here. Let's look at a daily. Wow, yeah. Support 1327. $13.45 is RTX last trade, 1501. So we're trading just below the S1. The high is 1618. It's below R1. So yeah, so SPX down 6 handles now. Let's go back to, what do we got here? 2.5 minutes to go. Let's focus on this close here for a few minutes. Down to the final 2 minutes. Somewhat disappointing. Was hoping to get a close at the upper end of the range today. Just cannot break out of this pattern here. Coming into the final minute. A little bit of a bid, not a lot. I just want to watch this. We're right into the final minute here, printing back toward the lows. There it is. Look at that. Just blow it out. Printed 17 back to 19. Right on the close. All right, I'll take a look at a couple other quick items here that are coming up. John Deere is a little heavy here, I think. PPM1 is a minus 0.60, so in downtrend. Major resistance 351. There is some support around the 371 was the 10-pair moving average. 354, probably at the extreme at the moment, but there's not a lot of trend. This is likely to go into kind of a sideways range here. Yeah, it's interesting. Somebody pointed out TLT is rallying, so looks like folks are expecting this employment or CPI number to come in maybe a little soft. We'll see if that works out. Thanks, Larry Hill. Appreciate that. It is well worth it, I think. I know, Mr. Tater, you're looking at that APPH. Just still nothing there. It's kind of locked in a range. Yeah, someone mentioned AVID daily, AVID technology. There was a cycle, came in a few days. This is a daily chart. We're printing right into some objectives that were issued back in May 19th. Those ranges are 33.19, 36.54. We went right into that range, 35.26 high. So we're right into that range. The extreme 38.61. PPMs are very positive, so this is a really nice trend. And probably been on for a while. Let me just look at one thing, and we're going to finish off here. Yes, our models are along this from around 27. If we were to let me switch this to the daily. Yeah, same price, even on the other models that came in. Caught that breakout and it's following through. So yeah, the stock looks interesting. I'm going to move this over to optimize weekly mode. Just see what it's doing there. Yeah, see, our intermediate models have owned this since $9.67. So it's been on this trend for a while. So the intermediates have definitely been on this. So I'm not sure when you found that stock or when you bought it. Thank you, Richard. Appreciate it. Well, folks, I think we're going to call it an end here. Come back on screen. Just thank everyone for coming. Hopefully you enjoyed the talk about energy and the opportunities that I see there. And make sure you subscribe so you know when I post my videos every night. I do a video every day. They've been really short lately. There's just been nothing to talk about. It's been kind of boring when I come in here at night to put that together. I typically do these things and we release our videos at around 11:30. The plan is to have them out by 11:30 p.m. Pacific time every night, and those videos are for the next day. So if you're not first time you're here, make sure you subscribe, hit that notification bell, and let's get up over 30,000 and tell our friends, and let's keep this channel growing. So thanks again, everyone, for watching. I hope this was a good session for everyone. Thank you again. Just remember to go to kendallreport.com and sign up for our exclusive content. We do have some announcements coming out. Thank you again, everyone.